The head of New Zealand's largest bank is reassuring customers there is plenty of cash in the ATMs and the financial system is sound, as economists warn of a shock which could dwarf the global financial crisis. ANZ Chief Executive Antonia Watson says staff were gearing up for customers to start applying for a mortgage payment holiday from Monday. That will mean a 6-month pause in payments and not losing your house. But there's a catch. The interest will still mount in the meantime. Antonia Watson spoke to RNZ's Guyon Espiner about how prepared ANZ is to weather the COVID-19 crisis.
It's a big economic challenge. I don't think it's unprecedented that we've shut the country down for 4 weeks. It's, as the Prime Minister has made very clear. Certainly our economists are forecasting GDP to have a significant impact on GDP. But I think also we should remember that we're probably in a better place in New Zealand than some other countries. We've had action by the Reserve Bank on monetary policy, and they've talked about quantitative easing, so we'll have money in the economy. The government's done a very big fiscal package, and it feels like they're signalling that there could be more. We've had the dollar fall, which helps our exporters. We've had dairy prices staying okay, and we're a long way away from the rest of the world, and we have control over our borders, and we've exercised that control at an earlier stage, I think, than we've seen other countries do. So, you know, it's not going to be pretty, but on balance, I'd rather be here than in some parts of the world.
Okay, step one for any bank. How sound is it? How sound is the ANZ right now?
Extremely sound. I think people need to have complete confidence in the banking system in New Zealand. If you think back to the GFC, where we came out in pretty good shape, actually, compared to other banks around the world, we've put in even more measures since then, mainly driven by the Reserve Bank on capital, so we're extremely well capitalised. We were on a path to become even more well capitalised, but that capital is something for a rainy day. The rainy day is here, and the Reserve Bank has acknowledged that and has put off some of those new capital requirements, but we've still got a lot of capital. Liquidity, we have a lot of money available to lend, and part of that is the outcome of the GFC and some of the measures that were put in. And we have a lot of liquidity in the system. The Governor has been very clear that, I think he said he's awash with cash and he'd love to show us into the vault to see it. But, you know, there's no concerns for New Zealanders about the safety of the banks or their ability to keep getting money.
So there will be no run on the banks in New Zealand?
Well, I can't control that, but there's absolutely no reason for there to be. The ATMs have got lots of cash in them. There is lots of cash in the system. The Reserve Bank's prepared to implement quantitative easing, so I think we're in a really, really good position as a country.
How would you compare this with the GFC?
It's different to the GFC because it's been such a sharp, sudden shock in terms of closing down the country. In terms of the economic position that we're in and the stability of the banking system, we're in a better position. I think we've got a government and regulators and banks that are very, very willing to work together. ANZ actually turned 180 yesterday. It's not something we made a huge fanfare about in the current circumstances, but we couldn't survive with 180 years without the economy of New Zealand doing well. So, you know, New Zealand's economic resilience is part of what makes us successful, and I think the partnership we've seen over the last couple of weeks between the government, the regulators and the banks has been really strong and will help us do that as well, and I think we're all willing to play our part.
Okay, one of the big concerns for many New Zealanders will be their home. It'll be their biggest asset for those who are lucky enough to have one and own their own home. What assurances can you give over mortgage payments and this so-called mortgage payment holiday? What can you tell us about how that might work? I know not all the details are there, but what can you do to tell us about that?
Absolutely, and look, that sort of response is something that we've always had available to customers. It's just that at this point in time we feel like it's going to need to happen at scale. There will be a lot of customers who might be out of work or might not be being paid for a period of time that need to have a pause on their mortgage repayments to give them some more cash in their lives. So whilst it's always been available, the regulator's been prepared to give us some dispensations to let us do it at scale. For example, if you go into arrears on your mortgage, usually that impacts on your credit record, and we don't really want that to happen in the current extreme circumstances. So we've worked on all that sort of thing. We're not quite ready to hit the go button. That will, for us, it will probably be about Monday, and that will be the ability for anyone who has either their home lending or their business lending backed by a mortgage to be able to take up to 6 months deferral of both their principal and interest payments. So it gives a 6-month period to free up that cash flow that you'd otherwise have to put into your mortgage.
Does the interest continue to accumulate while I'm taking the pause?
Yes, the interest will capitalise over that period of time. I think the important thing that at the moment is that interest rates are quite low. If interest rates were back where they were in the 80s, that would have a huge impact. It will have an impact. People will pay a bit more over the course of their loan, and it will take them a bit longer to pay their loan off. Say if they defer it for 6 months, that adds 6 months to the end of the loan. But I think that's it's a really nice way of providing people certainty for the next 6 months that they will keep their homes.
Okay, who roughly would be eligible? I know you haven't got all the T's crossed and I's dotted, but do you have to have lost your job to get this 6-month mortgage pause? It
is anyone whose mortgage was not in arrears, so was already viable lending or good lending at the point in time of, let's say, the end of February when this really started to ramp up as an issue. So it's not something we'll be putting people through onerous tests for, and part of that is I don't think we need to, because as we just talked about, the interest will capitalise. It's not in your interest to take a holiday if you don't need one.
And that is Antonia Watson from ANZ speaking there to Guyon, Espiner.